Thank you for standing by and welcome to the Liontown Resources Limited conference call. All participants are in a listen-only mode. There will be a presentation followed by a question and answer session. If you wish to ask a question, you will need to press the star key followed by the number 1 on your telephone keypad. I would now like to hand the conference over to Mr. Tony Ottaviano, Managing Director of Liontown. Please go ahead.
Thank you. Welcome everybody to the presentation today. I'm proud to announce a fully funded project to production and beyond. The team has remained focused on delivering the Kathleen Valley project and remain on schedule for first production in 2024. I want to draw your attention now to the presentation. If you go beyond the important information and go to slide 6, I can follow and take you through the various parts. We've provided a previous recap on the Kathleen Valley project a few weeks ago when we announced our revised capital, but also our operating costs and working capital requirements. I think it's important to note that we've got a robust project complete with a suite of economics, an operating cost that has been benchmarked and received market information and market data with our award of our mining contract to Burncut. We've got a $951 million capital cost estimate for first production. 90% of the capital is committed, and we're at least 50% complete. We're now announcing the final piece of this puzzle, which is our funding package, which includes a $760 million debt facility from a syndicate of Tier 1 banks, and also the government policy banks in the Export Finance Agency and Clean Energy Fund. We also have some very attractive terms with these banks. And finally, the last piece of the puzzle is the equity raise that we announced today of $376 million. Finally, what this allows us to do is not only be fully funded to first production, but beyond. We have built in sufficient liquidity buffer so that we are bulletproof in terms of our situation as we move into commissioning and then into ramp up. And we think that is prudent for a company of our scale and ambition. It gives us a capital structure that, which results in a debt-to-equity ratio of 45 to 55. We then look at Liontown and the recapping of Liontown. We have one of Australia's largest, highest-grade hard rock deposits. It's in a Tier 1 jurisdiction, being US IRA compliant material. Work is underway to meet the end of construction and enable us to be operationally ready, but also business ready, because we are building a company as well. We've started some early works in Buldania, and we're moving that project along as well to support the future plans of the company. And our downstream processing, especially our joint venture with Sumitomo, has kicked off, and we're starting to do some investigative work around that joint venture with them. If we then move into page 8, I think I've mentioned before, it always starts at the resource. And we've got a large, high-grade and independent great deposit in Kathleen Valley. We also have Buldania, as I've explained. This graph underpins why there has been so much interest in our project. And having just completed the funding, we have received substantial independent technical reviews done for the banks, which has completely given the project a tick. So if we then step through on page 9, various aspects of where the project is at the moment. So if we start with the mining operations, we are mining. We have been mining since January. Our Mount Man deposit is now concluded and it's ready to start the underground works, which will start in a few weeks. The Kathleen's Corner pit, which will serve to produce feed for us for the next 2.5 years, is now well and truly developed. And as I mentioned, Burncut will start the portal works in a few weeks. The process plant is on schedule to start production in mid-2024. The dry plant part of it is being constructed by Diab and is 4 months ahead of the overall plant commissioning. And the critical part is the wet plant, and we have a Tier 1 contractor in Monadelphous doing the work in this area. We've built out our accommodation facility at Kathleen Valley. We've got more than 780 rooms, and we've got 720 people in there today. If we move over to ESG, again, this is one of our core pillars of our strategy. And as I've mentioned before, we pride ourselves in not doing ESG by PowerPoint. It's real, tangible action on the ground. And with our partners at Joelle People, we continue to build on that understanding and in that relationship. Our hybrid renewable power station is on track. We've almost installed 31,000 solar panels, and the foundations for all the wind turbines have been done. And the gas backup power station has started construction. Finally, the people. We need to recruit 30 people a month, and we're on schedule. We're building a fantastic team, a team that was recognised and acknowledged by Albemarle during their due diligence. If we move over to slide 10, we give you a detailed breakdown of our construction schedule. And you can see from that critical path I mentioned earlier, which is the flotation circuit and the process plant. The water supply, the power station, and everything else is well and truly completed within the critical path timeline. If we move then over to capital costs, which is page 11, I have done, we've mentioned earlier on in this conversation that 90% of the capital has been committed. The remaining 10% is very small contracts that we will award in due course. We have financially incentivised the contractors to drive productivity with fixed and variable rates, and their labour productivity and their labour headcount is at their risk. We've done a good job of going through the plant and ensuring that we've learned from the lessons of others, and we've built in high specification materials, the best quality equipment. We've got METSO throughout the plant to reduce maintenance spend going forward, but also to improve operability. We've allowed $152 million of working capital and corporate costs, and that's part of the overall funding package. And finally, we've done some additional costs to accelerate our 4 million tonne expansion in the mine. And we've also put in about $37 million worth of associated building a fairly substantial stockpile before commissioning commences. If we then move over to slide 12, gives you a detailed breakdown of our operating costs. An average operating cost over the 10-year period starting from the 1st of January of $651 Australian cash costs. And we've also provided sustaining capital of $171 per dry metric tonne over that same period on average. But what I will say is these costs have been thoroughly benchmarked, and we have tested the market through the award of the Burncut contract, but also the award to Cube of our haulage contract. So we've got definite line of sight and current market pressures built into these costs. What I will also note is while we ramp up to full production, over that initial period and over the first year or two, we will get higher unit rates for costs because we have yet to get the true benefit of fixed cost dilution. If we move over to slide 13, I want to draw your attention to the right-hand side graph. What that's showing is our planned acceleration of our processing plant. So we will move the 4 million tonne expansion forward 2 years to 2027 compared to our DFS. But the capital costs and the board decision is yet to be made on this project. However, if you look at the left-hand side and you see our ore bodies, our 2 ore bodies, 1 mine strategy is well advanced. We've decided to accelerate the infrastructure required for the 4 million tonne mine today. That's built into our costs. So we will start mining both Mount Mann and Northwest Flats day 1. Each of these ore bodies will have separate infrastructure in the form of a decline, an incline, but also separate ventilation and separate paste fill plants. So it's effectively 2 ore bodies that will produce 2 million tonnes each to give us the aggregate 4. But the key point here is we're starting that 4 million tonnes early. So it gives us 4 years to ramp up until the processing plant is ready. Finally, if we look at page 14, I talk about the operational readiness and the business readiness. This is the stuff that people often think is boring, but it is crucial. If people don't do this, we can't run a successful company. We need to have the right structures, the right processes, the right procedures. What we can't measure, we won't be able to control. And we're well progressed on both fronts. Now I will introduce John Latto, our Chief Financial Officer, who will run you through our funding.
Thanks very much, Tony. So I'm now on page 16 of the presentation, and there are 4 key points I'd like to make on this slide. With the debt and equity that we have announced today, we are now fully funded to positive cash flow from operations. We will have a prudent buffer of 352 million, which is appropriate for an ASX 100 company, bringing online what will be a very sizable operation. As Tony mentioned, we have a robust balance sheet with a debt equity ratio for the project of approximately 45 to 55 post the raising. We do intend to use part of the funds that we will have post the raising to fully refinance the existing debt package that we have with Ford, and that will be approximately 308 million. Having said that, I'll turn over to page 17 of the presentation and just briefly talk about an overview of the debt terms. The debt that we have put in place today is a testament to the strength of the project. We have secured a group of quality Tier 1 banks, including the Big 4 Australian banks in ANZ, CBA, NAB and Westpac, 2 international banks in HSBC and SocGen, and 2 government banks in Export Finance and Clean Energy Fund. There has been, as Tony mentioned, a very rigorous DD process, as you can imagine, associated with the debt package, including the appointment of independent technical experts, which again points to the strength of the project. We have secured very attractive terms, both for pricing and tenor, which points to how far advanced we are with Kathleen Valley. You can see in the presentation that we have 2 different tenors with the debt package that we have put in place. That gives us a staggered repayment profile, which is very prudent. And having said that, I'll now turn back to Tony.
Thanks, John. If we move on to slide 18, the equity raising summary, what I would ask is you contact our advisors, our investment banks, both UBS and Bell Potter, to get more information on this. But effectively, we will do a placement for 365 million and then subsequently we'll do an SPP to the tune of about 45 million for our retail shareholders. Finally, if I turn people's attention to page 20, where I'll summarise the key value propositions for Liontown. As I mentioned, it always starts with the resource. We're located in a premier mining jurisdiction of Western Australia, which provides this US IRA compliant material. We're on target to produce first production mid-2024, and we've got a greater than 20-plus year mine life, which provides medium to long-term security to our customers. There is a robust lithium thematic going forward, notwithstanding the drop that we've seen in recent times. We are confident that in the longer term, we will see continual deficit in supply. The supply comes on slower than people anticipate. We have a clear long-term strategy and material value upside. We're progressing our downstream strategy, which we believe is our value maximising pathway. But we've also got our Buldania deposit, and we continue to look at opportunistic farmings as the Olympio deposit, for example. ESG remains core to our strategy, the dual contracting opportunities, which we continue to foster, but also the Kathleen Valley 95 megawatt hybrid power station. And we're targeting net zero emissions by 2034. We have the capital costs significantly de-risked and materially committed. As I mentioned, 90% of the project capital has been committed, and all the major mining and contracting contracts have been awarded, and we're now 50% complete, but we will see that escalate significantly over the next few months as the structural mechanical piping contractor Monadelphous ramps up. We're fully funded to first production and beyond, and we've got significant liquidity and buffer in our balance sheet to weather any potential storms. And finally, which can't be understated, we've got a very experienced leadership team and very strongly aligned shareholders. Now, the board itself owns 17% of the company, so our interests are completely aligned with the shareholders. All the key operational leadership positions have been filled, and we've got a strong leadership team around me with multi-commodity experience. So that brings the presentation to a conclusion. So I'm happy to answer any questions.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you're on a speakerphone, please pick up the handset to ask your question. Once again, that is star 1 to queue for a question. We'll now pause for a moment to allow for any questions to register. Thank you. There are no questions at this time. I'll now hand back to Mr. Ottaviano for closing remarks.
Thank you, everyone. I do want to, again, reinforce our announcement today around the funding package is significant, and it's yet another milestone in our development as we move to production in mid-2024. A $760 million commitment by some of the best banks in Australia and internationally, but also with the government policy banks supporting them. And I think it's a testament to the team for the work that they've done in that regard. We're very much focused on continuing the strong work that we've done historically and bringing this forward and getting benefit for all shareholders. Thank you.